incorporating a company while we were overseas away is quite impressive act, right, in our view.
Yep.
And then it was a few years down the road that during drinks and one of the celebration, they were sharing that. Do you remember that day when they told us that we were all shocked? We didn't know that we have been working in a company that did not exist. Like your employment contract says this I'm working for this company, but it did not exist for the months before. So I think that was when we realized that, hey, we are a real company with real responsibility, not just doing digital banking transfers and whatnot. So that was quite a momentous event.
Kelvin, welcome to the first podcast.
Welcome.
Thanks for having me.
So we always get to start with the founder talking through the company that you're building. So let's just get a bit of a primer for those listening as to what Funding Societies is.
Sure. So Funding Societies is the largest SME digital finance platform in Southeast Asia. What we do is that we give short-term working capital loans to small and medium businesses as well as startups to help them to scale and grow. So in 2022, we also acquired a Sequoia payments company called CardUp. So we've also entered into payments to help SMEs to make payments to their suppliers, but also collect payments from their customers. So currently we operate in 5 countries in Southeast Asia: Singapore, Indonesia, Malaysia, Thailand, as well as Vietnam. Been very fortunate to be backed by a series of growth funds, impact funds, as well as strategic investors like SMBC Bank, BRI Bank, Vision Fund, Sequoia Capital, or now called PIC 15, as well as the government-linked fund in Singapore, Malaysia, Khazanah, Cool Japan Fund, as well as EDBI. So the vision for us is to really empower the growth of small and medium businesses. Hence, we call ourselves Funding Societies, fund the growth of societies in Southeast Asia.
Excellent. And as you already know, I've done a little bit of background research on you, but we always like to start, early upbringing and trying to understand if there was early inclinations of entrepreneurship in those early years. But maybe do you want to talk through those early formative years for yourself?
I think there were probably 3 key stages in terms of early formative years, right? One was moving from, I was born in Malaysia, so I do speak Bahasa and Mandarin. I came to Singapore on a scholarship. So really moving from a small town with about 50,000 population to Singapore, which is of course a metropolitan city, right? And that has been a pretty instrumental in terms of how in terms of education quality, exposure and whatnot. So was very fortunate to the Singapore government for giving me that scholarship. I think subsequently was the whole move towards management consulting, with the whole idea that, hey, given I spend so much time at work, if you can make work life better, or how you spend time at work better, I can impact more lives, right? So I was very fortunate that I started with my career with Accenture. Was very fortunate that to become the first local university hire from McKinsey, because previously McKinsey Singapore does not hire from local universities. So despite me graduating as a valedictorian at the National University of Singapore, they were looking at more Singaporeans from overseas. So I was very fortunate to be the first, and that helped me to get and enter into more structured thinking in management consulting as well as execution. So everyone knew strategy consulting, but I thought for me to one up others after the experience of Accenture is not only to know strategy but also execution. Therefore, I spent half of my time doing a bank transformation for Indonesian bank, which is why I got me exposed to, of course, into banking. And that also built on my past experience at university, whereby we were part of the whole NUS Overseas College program, one of the earlier programs in Singapore to kind of manufacture founders, whereby I spent a year at the University of Pennsylvania studying, but also working at a startup, right? So that was the first exposure towards a startup. I think finally what got us moving was when I met my co-founder at Harvard Business School. And I think at that time, the Harvard Kool-Aid was that you want to make a difference in the world, right? And we thought, hey, now that we're in a position of privilege, how do we pay it forward? We saw SMEs playing a big part in terms of GDP and employment. So we thought, okay, let's help the SMEs. What was the biggest pain point? Financing. We saw that the whole fintech boom was happening in US. We could adapt to Southeast Asia with certain level of competitive advantage because we knew both international as well as we knew local context. So, and we're passionate about underdogs because of our background. So we thought, okay, let's help SMEs in terms of financing. And that's how we started, and was very fortunate to meet my co-founder Reynald, who has the same passion, comes from Indonesia. So together with our background, we were able to win Singapore, Indonesia, Malaysia the first 3 years and then build it on from there.
To be valedictorian at National University of Singapore, I mean, Singapore's a very academically minded country. Where did that drive come from initially? Like what gave you that sort of early inclination to go do exceptional things like you've gone on to do, but starting at NUS, where did that drive come from?
Actually, it wasn't a plan or target to graduate as valedictorian, right? So it was just how do you maximize life at that point in time. So I think the few who got into multiple programs and crammed them all within 4 years, that turns out to be quite rare at that point in time. So basically, I was part of the University Business Administration, business school, but at the same time for undergraduate, but also at the same time was the early cohort of accountancy. So that was quite rare in the first place because NUS was just starting accountancy.
Right.
I was very fortunate to be part of the whole University Scholars Program because I wanted a liberal arts background, and while I received offers from the US universities at that point in time, I did not come with sufficient scholarship, whereas the Singapore government was paying for most of my Singapore education, right? So followed by the entrepreneurship program, which took 1 year to the US. Most people had to delay. I managed to optimize ahead of time, and I think finally spent quite a bit of time, a ton of time into business case competitions because at that time we felt that it allows me to travel overseas for free because the school is paying for it. But
good perk.
So I think I got a lot more than what we paid for school actually. So I think we were fortunate to be among the second batch that started a winning streak for the university also. So it wasn't because my grades was number one. I'm pretty sure there were a few who had higher, or maybe quite a few who had better grades than I did. But I think the fact that I was very fortunate to be given opportunities to have a holistic background and experience. I think that helps to differentiate among the other folks who are equally good in academics. Yep.
And the decision to go into consulting and specifically join McKinsey, was that a theory that you wanted to just spend a few years there and you'd sort of figure out a broader career trajectory, or it was, I want to go be a partner and, be at McKinsey long term? What was the thinking?
So I was quite clear that it would be for a few years, but the question is how many years also, right? I think when I was there, I start seeing the writings on war that people initially started living at a partner level as a chief strategy officer. While I was there, I realized that it started coming down to living at a manager level, and a lot of the early team members of, say, Lazada and the startups in Southeast Asia came from the McKinsey managers or above, right? So I knew that the writings on the war that the strength, the skills that I learned here may not actually last as long as I wish to, right? So it's also why I decided that, hey, everyone can do strategy consulting. Let me do the dirty work at that point in time, which was execution. So I spent half my time there, and that helps me to gave me the stepping stone to go into KKR after as well, because they were looking for someone who is local, who has been in the top consulting firm and has spent some time doing execution, and I was literally the rare few at that point in time, right? So I knew that was to build up skill sets and whatnot. But what I did not know, and I knew that it was coming in earlier, and analyst probably would be my best exit point, or even associate after MBA. But what I did not know was after graduation, we would have started a company during university at MBA. So once we started, and we were fortunate to raise our seed round during summer holidays and Series A from Sequoia Capital right before graduation, you're kind of pot committed. So we paid back for the scholarship that McKinsey has given us and had given me, and that we focus full time on funding societies.
Out of interest, you obviously had the exposure with Penn, and then you obviously went to HBS. Was there an interest there to kind of pursue the US as a trajectory, or was it always sort of in the back of your head to kind of take some learnings from there and kind of apply them back into an SEA lens?
I think it's really a combination. We did seriously evaluate whether, hey, should I just stay back in the US and whatnot, right? Because candidly, it's a much bigger playing field and opportunity. But what we also realized is that we did not know many really successful Asian founders at that point in time. It may be our own ignorance, or just statistically there are fewer of them, right? But we did not see many of them. So to an extent, we feel that there's a good chance that we'll be decently successful, but there could be a bamboo ceiling at some point in time. And further, if I look back at Southeast Asia, we felt that because we were despite coming from a middle class background, we were quite fortunate from a professional perspective. So we thought that it is only beholden on us to pay it forward in Southeast Asia, right? So that's why we decided to come back to Southeast Asia. So both from a strategic perspective, we find that potentially we could hit greater success with less ceiling, but at the same time, because we felt that the sense of duty to the region.
We would have first connected 8-9 years ago, and the idea of starting something in financial services, particularly with an SME lens in 2014, 2015, really interesting theoretically, but I mean, pretty gnarly from an actual go and do it. Because if you think about even the regulatory landscape of getting started at that time, I mean, the idea of sandboxes were just starting to be spoken about to kind of help people on ramp into fintech.
Right.
Was that not sort of a almost insurmountable barrier, or you just thought, well, we'll just go do it?
I think it was definitely something that was pretty scary at that point in time. I think we did it based on, I think, assessment of 3 criteria, right? At that point in time, the whole wave was that, hey, let's copy the US because Southeast Asia is 5-10 years behind, right? So we are the Uber of Southeast Asia, we are the so-and-so of Southeast Asia, right? And because of that, we basically studied the top 50, 100 innovative businesses in US in the last 5-10 years. And we basically screened through 3 factors, right? That, hey, passionate about the business, size of the business, and finally, whether there's a path to be number 1, right? And we figured that if from a passion perspective, we're big on underdogs, and SMEs is one of the biggest one and most impactful one. And the path to be number 1 came from the fact that abusing the Harvard brand name, like every founder in US were willing to talk to us, and we were able to learn how to dissect the business model, what works for Southeast Asia, what did not, right? So we thought that, at the same time, when it comes to lending, SMEs are very localized business. We deliberately not choose to do consumer lending because of 2 factors. One is passion. So we knew that we were passionate about helping SM businesses to grow and create more jobs. We weren't as passionate about helping you buy your next car, candidly, or getting married. And that, so from a passion perspective, it did not fit our underdogs and impact mentality. But also, secondly, was that we expected the big tech firms or the Chinese players to have a decisive advantage in that space, which we can't win, right? So there's no path to be number 1 for us there. So that's why we focus on SMEs. And so given that we knew that was a business that we want to go to based on the 3 criteria, the next step is that, okay, fine, there are all these ABC risks there. Is it insurmountable, or can we actually solve it, right? So we took a calculated risk that we were still in school. So even if worst case scenario happens, I'm still in school and I can find a job. Second is that we were very fortunate that we met the ex-finance minister of Indonesia, Pak Chatib Basri, who had a very good and respected reputation and was helping us to open doors in Indonesia. While in Singapore, there's a whole fintech. MES was becoming more open towards fintech also. So we thought that is a calculated risk that let's give it a shot. If it doesn't work, sure, I will go back to private equity or consulting. And we're very fortunate that it worked out at that point in time. There were quite a few near-death moments because it's a new space. But I think so far we've been very fortunate in the journey.
I do want to double click on the HBS moment, because in some ways that was like pivotal in you guys starting this, right? And I've heard, like, listening to other interviews that you've done, you've mentioned you met your co-founder, like, having drinks in New York or Boston, I think it was. But I do want to double click on, that, like, the aha moment of, like, uncovering that you guys needed to build this within that actual business school setting.
So it was New York, actually, but we had a lot of drinks at Boston as well. I guess the relationship helped to weather the various shocks during the business also. But I think it did not have an aha moment per se, but more of, hey, this is interesting, let's spend more time. Let's put together some money amongst ourselves, candidly mostly from him, because he's from a family business background, and he was a bit more generous and willing. So and that we started, and what we find is that we spend more and more time doing it, such that, hey, let's not find an internship during our summer holidays, let's just do it. And before we knew, during summer holidays, when we came back, the team members were saying that there's this Tech in Asia startup competition. Candidly, we didn't know what it was at the point in time. We didn't even know Tech in Asia at the point in time, but the team members said that you should do, so we did it, and was fortunate that we won that, and the news started spreading about funding societies, and seed investor came and after that, you're committed, right? You're responsible for our team, you're responsible for capital, and we continue doing it, right? So it wasn't a aha moment that this is going to work or not, or hey, I want to start a company, but it was really progressively that we find that this is something that is worthwhile doing. It didn't seem like others know it better, others know it significantly better, even though there were other earlier players. And that's why we thought, hey, given that we are given an opportunity to do it and it's impactful, we should do it for Southeast Asia.
It's interesting. We talked to a number of founders on this podcast, and a lot of them do come from somewhat that consulting background. And some of them kind of learn to hate that pathway and want to jump and try something and build something themselves. But I'm just keen to get your take. Do you think that certain traits from the consulting world give you an advantage at actually starting your own business? Were there actually really good learnings that maybe came from Accenture or McKinsey that helped you in building?
I do think that there were some traits that were helpful And personally, I enjoyed the whole consulting experience at McKinsey, Accenture, as well as private equity at KKR, right? So it wasn't a push factors per se. There are great employers, there are great roles to have. I think what helped us was two things. One was really maybe 2 or 3 things. One was the whole MISI structured thinking. Candidly, it still helps us until today, because I find that a lot of things we were solving by first principles, and without being able to dissect things in a very structured way. Oftentimes people rely on, this is how the banks are doing it, this is how the other non-banks are doing it, this is how you do it in US. It's like, sure, but if you dissect it out, there are actual real factors that you can't do it in Southeast Asia, and you end up a situation whereby you're just trying to copy and paste what was done elsewhere, and you realize that you keep getting into a wall, and you can't figure out why, right? So one example was that we were so convinced that we should do e-commerce merchant financing because that is what worked in the US and other countries, right? If fast forward, we've tried and we tried. It just didn't work, at least in the first 5 years of a business, or it was a very small part of a business. And we realized that, hey, compared to the US and even China, the volumes of SME e-commerce merchants in Southeast Asia are so much lower. Like it's 1/10 of the overall sales, right? The volumes are still very volatile. It's still very cash basis. How are you really going to manage risk? It's not as digital and so on and so forth, right? So I think the whole structured thinking from consulting was really helpful, and still is in terms of thinking things from a first principle perspective. But also, I think large part about stakeholder management and execution, because I was very fortunate to spend a year in terms of execution. And you find that, and this is probably the challenge that I find that other consultants may face, right? That everyone knows the answer, but the best answer may not be the most relevant answer or the suitable answer at this point in time, right? And the fact that you can't think from, or you don't spend enough time thinking about the stakeholders' perspective, but just push what is so theoretically, technically right, actually ends up not being executed. And in worst is that, so a partially good answer but well executed is much better than a 100% good answer but it's not being executed, right? So I think that has helped us to actually manage stakeholders and navigate the landscape when it's fairly uncertain at an early stage, even until now.
Do you remember what you would call, like, what was day one then formally in the business? Like, what do you remember official day one of funding societies, or is there sort of a natural ramping?
It was a natural ramping. Like I recall days where we posted job ads at startupjobsasia.com. We interviewed using Skype, and it was still a Skype era at that time. And it was a free version, right? And we were using like internet banking, and I was just literally drawing up pay slips for the team members using Excel and PDF. It also. The moment that my first team member, Vikas, who's still with us, still reminds us, was how we were super excited to declare that, hey, team, we are finally incorporated and whatnot. Because incorporating a company while we were overseas away is quite impressive act, right, in our view.
Yep.
And then it was a few years down the road that during drinks and one of the celebration, they were sharing that. Do you remember that day where they told us that we were all shocked? We didn't know that we have been working in a company that did not exist. Like your employment contract says this I'm working for this company, but it did not exist for the months before. So I think that was when we realized that, hey, we are a real company with real responsibility, not just doing digital banking transfers and whatnot. So that was quite a momentous event.
And how long did it take before, I guess, the reality of the whole situation? Because I mean, you start a company, it's really exciting, you're sort of ramping into it, and then you have your first near death, oh shit moment. Like when does that happen? How long into the journey?
It was 2 weeks after graduation. So we received Sequoia's, and at that time we were still doing our graduation travels. We're of course working at European time zone and whatnot. And one of the regulators announced with immediate effect that, hey, all peer-to-business lending platforms, all crowdfunding platforms have to be licensed with immediate effect. And that was in the midst of and that was because of a huge blow up in China. So literally, Sequoia was still doing the due diligence, including legal due diligence at that point in time. That country accounted for 90% of my business at that point in time because the second country is only 10%. So, and I had like 2 months of runway in a bank account, right? So if Sequoia put back the term sheet for good reasons, because now it is 1/10 of what they think it was, also we would have collapsed, right? We would be the first HBS graduate to lose their job after graduation. So it was quite a super severe moment, such that our first hire, his name is Vikas, he's like Indian. Also, that when we had a call with MAS, I could see his face turn green. It was quite serious at that point in time. But I was very, very fortunate that the regulator gave us, like we basically adjusted the business from crowdfunding to on-balance sheet lending within that month itself. Our only institutional lender who was lending us on our platform was willing to do it on balance sheet. We managed to change all our legal structures whatsoever into this to be on balance sheet focused. We spent the last penny we have to get a legal opinion based on what we're doing, and then submit an application. And was very fortunate that the regulator that Sequoia continued their commitment, wired the money, and the regulator gave us a provisional in principle approval at the fastest ever in their history, such that we continued to survive. Right, and during that period of time, I was also getting married. So
a little bit going on.
And the in-laws, my parents-in-law, did not know that that the son-in-law and they did not come from this region. They came from another region. That the son-in-law that they're marrying the daughter over to a new region is totally losing their job, right? So his job, right? So it's a pretty interesting time, but it's also what builds resilience for us in the years to come.
Sounds terrifying, honestly. Well, once you kind of overcome that 2 to 3 weeks, what was the prioritization for you guys? Was it, we have the money in the bank now, we're past the first regulatory challenge. Was it about hiring? Was it about looking at markets? Was it about, speaking to customers? Was it about building product? Like, how did you guys think through that in the early days?
I think in the early days, there were a lot of things that we were driving quite a few things, right? I think one was that we knew that we had to, like a lot of things we want to make it a lot better, candidly, but given that the resources are so limited, it's really just good enough, right? For example, at that point in time, we did not have a tech team. We literally hired the founder of the IT firm we were using. We told him that why not you just shut down your company and then move and join us, right? So at the early part of it was really just building up team members because everything was so bare bones or so, right? Literally, we were still using paper and drawing out the websites and one off for slides for each, right? So we knew that whatever we want to do, we need to start hiring help, especially when we really didn't know a lot, right? So I think that the initial part was really hiring, was really codifying values, and that was really thanks to Sequoia that instead of asking us to chase growth, they really asked us to prioritize, hey, how do we think about core values and whatnot, which I think still help to stick up to today, right, as an organization, and it was extremely helpful. It was about figuring out product market fit. So at the early days, it was really just throwing shit on the wall and see what sticks, right? And then it turns out that, hey, term loans and invoice financing probably works out quite well or so. So let's, how can we deep dive? So it was also about product building from a financial product perspective. It was also about building up investor base because it was a crowdfunding platform. So at the initial days, the crowd was really just Reynolds and myself. And how do I get more? It was just too much to solve at a point in time. So we thought, hey, one thing that we really learned was that PR is one of the most effective and cheap, efficient way of acquiring customers, such that if you use it for the wrong reason, even fake news, people believe in it, right? So why not use it for good and have some good news about the industry? So we had a very conscious PR strategy that helps us to bring our name out and get our initial customers very efficiently. So we're really driving on almost all fronts that everything. HR, funding, like on one side you have assets, you have the borrowers, you have lenders, you have team members, you have regulators, you need to continue to stay compliant, you have tech, you have HR, so and so forth. So literally you're just doing everything at that point in time. So we were working until 2 a.m. almost daily. So we've been around for 10 years. So for the first 8 years, we were working until 2 a.m. almost daily, every weekday or so. Until only recent times, we realized that you didn't pay the stuff that we've cut back. But otherwise, there were a lot of things for us to cover.
You touched on it there, and one of the points was product market fit. And so we have a lot of early stage founders that are listening, and they're going through the motions right now as to kind of understanding, what is product market fit? Right. How do I know when I've hit it? How would you define that? And how did you know that funding societies had hit it?
So I think in the initial days were that if you offer a product and people use it, then there's a product market fit, right? But later on, we extrapolate further that it's not just product market fit, but also product market risk fit, right? That, hey, I can give out a loan, but if it doesn't return, it doesn't help. Funding fit, that, hey, banks do this, it's very safe, there's product market fit, but hey, the cost of fund is too low, no investors will crowdfund it, right? And then subsequently channel fit, right? That, hey, I have a product, but I can't scale up, it's going to be a small segment. And finally tech fit, right? That, okay, fine, this is a product that works and it can scale up, how do I automate it to be efficient, right? So I think over time, we have a more matured or holistic way of thinking about product market fit, not just beyond just having customers per se. And I think that in terms of business-wise, we think there are two ways to achieve that. One, of course, is literally just throw everything on the wall, what you are doing, what competitors are doing, and then we iterate along the way. And I think that is necessary for a business where speed of execution is extremely important. It's a decently open business model that whoever executes fastest wins, right? So that would be the approach that we will take in that kind of business context, and that's what we did. But we also realized that there are products where no one understands how it's going to work. Example, like the whole Airbnb business. Who the hell thinks about how do you share houses, right? So you can actually take time to get and figure out, right? But because at that point in time, our business is more of the former, whereby the faster I scale, the faster I collect data, the faster I can train my credit model, the faster I give out loans better, right? We index on data collections. That's why speed of execution becomes important, and there is a natural trade-off between speed as well as capital efficiency at that point in time, right? So, and that was also supported by our shareholders who has nudged us towards that direction. So I think at that point in time, it works, because fast forward now, there are ways that you can execute quickly without spending that much money because of AI, and the market is a lot more rational now. Therefore, you take a more holistic view towards product market fit. But I think at the initial days was really just try everything and see what works and double down.
It's interesting. Like one of my questions, given we're in 2025 right now, and you've got a ton of data pipelines that you work with, you're defining risk on a bunch of credit models. You've got a variety of different loan structures. How do you guys utilize, the new age of kind of AI, ML technology that's coming out, or how do you keep ahead of that?
So AI actually did not make as big an impact for us because, like from a credit scoring perspective, we've always been trying to use that, right? So, of course, from a scorecard to regression to machine learning, right? But the limiting factor at that point in time wasn't the technology. The limiting factor was data, right? And most importantly, output data, right? So everyone has input data, but how many people knows like, okay, with all this, is the customer going to pay or not, right? So output data is a limiting factor, and the only two ways for us to learn is, number one, we give out a loan, which is what we did, right? Steadily build up. So number two is that you give out a lot of loans at a short period of time, and then see what's the results, right? So we decided to give some loans and then use time as an advantage, right? So AI did not make as big an impact for us, but what we find is that Gen AI makes a pretty decisive change for us from a telemarketing and collections. That hey, now the person I can make a lot more calls in a much more efficient way, and it's a very real way. People can scam centers can use it for bad. Why can't I use it for good, right? So telemarketing and collections are very efficient. Can become more efficient. In terms of data collections, usually last time you used to have limitation in terms of unstructured data. Now Gen AI can help me to interpret. For it comes to operations wise, I can have business folks automating their role. Last time you only have tech folks automating their role. Because for tech folks, they can be a lot more efficient in terms of coding and so forth, right? So we find that Gen AI has a much bigger impact, right? And the key challenge is not about, it's both in terms of, hey, let's set up a top-down strategy, which helps to a certain extent, but also bottom-up to get people to outrightly adopt it, right? Therefore, we have to run through like change management program that, hey, this is a workshop. It's only for high posts, high potentials, also so that there's a pull factor. But for you to join part of this training, which we'll be putting resources on, you need to come up with a proposal on what you're going to automate. And then we run through the course. We have an assessment process. We run through the ones who selected for the course. Subsequently, you need to build it up as you have committed upfront. There's an office hour whereby you have, if you figure out, if you hit a roadblock there, you can come and the professor or engineer will help you to unblock it, and then you have a showcase in terms of what you have automated, right? So, and then you glorify the first follower, right? So that's why we have done that. The first 15-20% of the folks have already gone through a program. We're going through the next early majority or so. So really trying to take both a top-down as well as a bottom-up process towards pushing adoption.
How did you think about team early on? So, talking about establishing core values, but in terms of team acquisition and talent in the region at that time, I mean, how did you manage that, and what was the approach that you guys ultimately took?
Up to today, we still don't know if we did the right approach, but we have not been able to ask or get evidence from others that they have a better one than we. Because we do think that it's a bit like democracy, right? There's no better form of government. It's not a great form, but there's no better form, right? So I think that HBS or conventional wisdom is that, hey, you get the best talent, or get A+ talent, because A+ talent get higher A talent, and if you get B talent, then they'll hire C talent or so, right? But what I find in Southeast Asia, it's really hard to get A+ talent or even A talents per se, and it's a really combination of the startup scene is so new. Like, how many people really know how to build stuff rather than managing stuff, delegating stuff, right? So like, there are so few builders in the first place. And even worse for landing industry, right? That you need the technical skills that one comes from a bank, but you totally don't need the culture that comes from the bank, right? So the pool was quite small, candidly, and oftentimes it comes with a hefty price, and you don't even know after you spend a hefty price you get an outcome for it also. And if you don't get an outcome, you let the person go. Once you start doing this a bit more, you start realizing it starts destabilizing the team, because the team feels that how come the management keeps changing, right? And for other organizations or in other markets, they may find that that's normal, right? Obviously, if you see that the person is not delivering, it's fine for the person to change, for the company to change, right? But again, back to Southeast Asia, where startup is relatively new, people becomes worried and panic. Is it because the person discovered something I didn't know, therefore the company is in shit and therefore I should leave also? So there are a lot of these things happening. That's why to an extent we try to strike a balance whereby we basically hire folks for fit for purpose. May not be A+, but I really need an accountant to do these things. It's not a top accountant, but it solves my problems at the right price, sure. Or we prioritize folks who have some basic functional skills, but fantastic attitude, so that they will learn along the way also, right? So, and that if we found out anyone who is not growing or we need to upgrade, either first is that if we can coach, we coach. If we cannot coach, we change. But even if we change it more systematically, right? You can't change like N percentage of company at a point in time, right? We basically prioritize which one should we make a change first, so that we space out the changes. Where's the biggest pain point, where I will get the most leverage, and then I change systematically rather than changing everything at the same time, which is not feasible and reasonable. So it's really striking a balance of fit for purpose, my attitude over skills, and then systematic upgrades, rather than trying to shoot for the moons. And we rarely found many in the region.
To achieve that hiring plan, I guess two parts to the question. What have you learned in the last 10 years of interviewing people? What's been the most insightful questions you can ask or activities you can have them undertake that
Sure.
They ultimately, what you expect is what you actually get in performance?
Maybe I'll just add one point just now, right? That talents are rare in Southeast Asia at the salary range that we are willing to pay. So just to be clear, so I don't offend any top folks that I'm great, but we just kind of for me, which is true as well. So I think in terms of hiring wise, so we have spoken to like headhunters of startups in other markets, and Endeavour candidly has been a great network for us in terms of knowing the hiring practices and lessons in other markets. Right? So really grateful for them. I think a few lessons that we synthesized was that I think number one is a lot of people over-index on CV. I realized that CV is actually not very predictive, right? Because a lot of people are so well trained in terms of writing CVs nowadays, especially for senior folks, right? So actually, you can't tell much from CVs. Of course, there are some very decisive factors like, hey, how many years in a company? You can't fluff it or so, right? But what you actually did, is it you or the team's responsibility or your manager's responsibility? Is quite hard to actually differentiate per se, right? So I think don't overly index on CVs, even if they come from really good companies like say Amazon and Google and whatnot. We used to see these top folks with starry eyes, and then realize that actually the context is very different. When they come to a startup, they may not be as effective as you like to, right? Of course, many of them still are, but don't overly index on CVs. I think that's number one, right? Number two is that we find that people with diverse backgrounds turn out to be quite helpful, right? So like, we really like people who have been both in small and big companies before. We have really like people who has been in different types of companies before, so that they have first principle thinking, they can cross-learn rather than say, this is how it's being done at a bank. I was like, sure, but what about other banks or other contexts or so, right? So diverse backgrounds, especially small, big companies. We find that reference checks work out very, very, very well. We find that having a junior direct report, interviewing the manager works very well, because it's a bit like hiring your own boss. That helps me to get buy-in upfront, but also get really detailed questions asked, and also helps us to check egos of new leaders, right? Because we find that once there's a power distance, people act quite differently. So if you have a direct report interviewing you, it makes quite a big difference. Some people don't even want to be interviewed by the direct reports because, hey, why is my direct report interviewing me, right? So I think that helps us to have a check in terms of egos. We find business case works out very well, and the business case is as close as what he or she will be doing, such that if you are accepted, the business case becomes your 90-day plan. So you cannot just anyhow fluff, because what you're going to write there is going to be a 90-day plan, right? So those tricks have worked out quite well for us. But we also realized that even with the best interview process, at least one of the talent HR firm told us that the accuracy is only 50 to 60%, even with the best process, right? So I think we seek peace in that. Okay, if you find it wrong, if you got it wrong, it's normal. If you find it right, great. And let's keep improving along the way.
And then how do you manage talent? So you mentioned that, we try to coach. If we can't, then we ultimately have to make a change. I imagine that there's pretty advanced professional development and feedback plans that have to go alongside that to make sure that you've got the benchmarking to make decisions efficiently and with agility?
So I think that one, we are also a work in progress and we're learning, because what we realize is that we've tried structured trainings and whatnot by really good consulting firms, coaching firms, so on and so forth, right? But if I actually measure the results, it's really quite negligible.
Interesting.
And you just use a very simple test, right? That if a concept is being taught in the particular workshop, 2 weeks later, how many people actually use it?
Yep.
1 month later, how many people actually use it? So we realize actually it's not good use of money at all on those cases, right? What I find is that it's better for you to spot the ones that actually are willing to learn and improve. And one example is that if you give a feedback, whether the person act on it, as simple as that, right? And then you have an informal record, or you work with an HR that you have a specific list that you know who can grow and who cannot grow. Basically, give more opportunities and training and coaching, and take care of them a bit more than perhaps others, right? And that gets us into another question, right? That like some say fairness is treating everyone equally, right? To me, I say that fairness is treating based on what they deserve. But the question is that a lot of things, what a person deserves is very subtle. Like, hey, a person goes out of the way, goes the extra mile to help the company in an area that's outside the function, versus someone who does just diligently, this is my role or so, right? And you can't have a very systematic way to track it, to say that, hey, because of this matrix, therefore I'm prioritizing this person, right? But yet, at absence of that, you end up treating everyone, you don't have the resources for it. Treating everyone the same, you don't have the resources for it, right? And you get open to being accused that, oh, you're showing favoritism, politics, blah, blah, so on and so forth, right? So candidly, we're still striking a balance in that front that, hey, we try to, for things that are straightforward, we try to treat everyone as equal as possible. Hey, this AI course, this is an assessment. If you promise to do A, B, C, D, we'll admit it to you. But things that are more qualitative, that we still can't have a matrix, then we have to put a bit of discretion. So to a large extent, it's still a work in progress. And for the ones who show the right culture fit and growth mindset, we just keep coaching them along the way and help to promote them.
And then, founders often talk about breakpoints, breakpoints in your FTE growth, where at some point things kind of just fall apart. Going from 10 to 20 FTEs often is, you have to open up lines of communication like you haven't before. Mm-hmm. What's been the hardest growth point or break point? When have you sort of seen the wheels become challenging and sort of potentially falling off in terms of the amount of FTEs, and what gets really hard? The
first break point that you mentioned, I think is true. That it's probably between 10 or 20, right? Whereby you start managing managers, right? Not just individual contributors. The next one we see is around 50 or so within a single location, because that's when you can't remember, that you can't know everything in each of the, or know what everyone is doing. Also, and then after that, candidly, we see that it doesn't changes as much, right? Whether is it 50 to 100 or 50 to 200, whatever process that you use to align 50 is the same process that you use to align 100, right?
Interesting.
Except that I find that a bigger role that HR takes a bigger role after that, in the sense that once the basic communication lines, performance management KPIs, those are relatively straightforward, but things start to crack when there's a he says, she says, no one confirms. Like, who is going to investigate, and you don't have the capacity to do it, right? And also that becomes tricky, right? Whereby you need a very judicious and thoughtful HR to help you in that process, right? Another one is, I find that a need to have not just marketing, but internal marketing as well, right? Because you realize that we actually try to communicate very well to the customers outside, but internally, when you cross 50 or so, like newsletter itself is not that useful. Town halls, if you just go and do a test, like, do people really remember all the details and whatnot, right? How much details they actually recollect, right? How can we step up the quality of internal conversations to be on par of external conversations, right? I think those two levers are quite important once we cross 50 people, especially in a multi-country, multi-geography and multi-language kind of environment.
Yeah, that was actually going to be one of my questions, and you just kind of nailed it at the end there. It was like, I was surprised that you hadn't referenced the multi-country element, because I'm sure that, at the start of this conversation, you were talking about defining values and then how those values evolve over time, especially as you go from, Singapore, Indonesia, Thailand, Malaysia. Yep. Has that geo expansion been somewhat challenging?
So I think for our business line, definitely have been challenging, I think in two ways. And one is that we have come to conclude that the company culture has to overpower the local local nuances, right? So sometimes people say that, in Indonesia, this is how we do things, Malaysia, this is how we do things. Like, sure, noted, but it's not in conflict that all cultures are willing to focus on impact or calculate ROI or prefer teamwork. You may address conflict different ways, but you still prioritize teamwork, or you still disable politics, which is one of our core values, right? That, hey, if you see someone exaggerating, saying fake news or giving half-truth, the way to address it may be different, but I think that we all can all agree that we should be speaking up to or address it rather than just letting it continue, right? Also, so I think one thing that we've resolved is that company culture has to overpower local culture, right? That's number one. I think number two is also that building empathy and understanding across countries becomes very important. And candidly, that's also something that we are still work in progress, right? Both in terms of building processes to enable that kind of empathy and understanding to happen, but also people coaching and guidance, right? That the reality is like credit risk in Singapore and Malaysia and Indonesia are all very different, right? So yes, you know credit risk, but the documents are different in the first place. How do you actually manage that nuances also? How do you create a healthy tension rather than that I'm right, you're wrong, right? So it's something that we spend a lot of time on. And that is necessary because you don't want to be in a situation where, hey, every country can run like a separate entity, but at the same time, you want to and because you want to have cross-learning, scale efficiency, blah, blah, so and so forth, right? But at the same time, you don't want to be a situation whereby everyone listens to Singapore as if Singapore knows all the other 5 markets per se, right? So I think driving the culture conversation forum as well as necessary process becomes important, and it's something that we're still always working to improve. Yeah.
I do want to shift to fundraising, and you've obviously given the incredible story about what happened with Sequoia when you're at HBS, but I guess how has your thought process evolved on running a proper diligent process to fundraise with investors, and how has that evolved over a multitude of funding rounds?
A few things that we have learned along the way is, number one, we, maybe because of the whole McKinsey training, we always start off with what will it take for us to raise the next round. So for example, after the whole Series A, the next day, like you have a Series A party, the next day, everyone's office, what does it take for us to hit Series B? What are the metrics? What do we need to show? So and so forth. And then we work backwards, right, on that front. And that, of course, requires us to stay close to the pulse of the market, that what we were Series B investor want at that point in time also, right? So I think that has helped us quite well. But over time, what we realize is really setting up sufficient tracking of all these metrics, because some of these metrics investors may ask may be actually relevant, but it's not your top priority. You may not actually prioritize up until 3 months before you fundraise, and then you start scrambling on, right? Also, right. So setting that processes up progressively, I think that is quite important along the way. I think last is forming a worldview of the market now and the future, right? Because we do find that sometimes investors are a bit fickle and understand, if I put myself into their shoes, I can understand why, right? That the herd does provide certain level of safety. The market changes in a way that the investors can't predict themselves as well, right? So to an extent, I think I find that we need to form a worldview ourselves of what it would be the future, because we have seen situations whereby we followed what the board has asked us to do and it turns out wrong. And hey, why do you listen to us? You need to take accountability on the decision. But I realized that, and understandably so, because even the board member, he's really doing his best, right? And if push comes to shove and it turns out his view turns out to be wrong, is he really going to stick up his neck and bang tables at the IC to say, this is my decision, I take accountability, and let's invest more into this company because of the mistake or so, right? It's not going to happen, right? But the flip side is also true, that if they say something, I disagree and I drive in a different way, if the outcome is positive, at the end of the day, they will still back us again, right? Or rather, a flip side is that if the outcome is negative, whether is it because of me or because of inputs, I'm still going to be screwed, right? So might as well take their view and then form your own opinion as to what makes sense, and then go drive with it by conviction.
You mentioned, the potential for investors to be fickle, and I think, if you think about the last 4 years of the market, I would say Southeast Asia has probably seen one of the largest net impacts of flow of investor capital. But in particular in fintech, it sort of has whipsawed to a degree, right? How have you guys navigated that? And I guess how have you thought about learnings from that as you think to the future in terms of what becomes important now?
Now the new conventional wisdom of like profitability and whatnot, I think rings true, right? I think, and the whipsaw is quite painful for first-time founders like ourselves, right? Because we were like, hey, it's a holy grail. What you say is gospel truth, and it turns out it's not necessarily the case, and you're not there for us. Also, just to be clear, our shareholders have been fantastic. It's more of a minority cases rather than a majority also, right? Because there's bound to be this difference in opinions, and that's what, in our view, forms a healthy board, right?
Sure.
And collaboration. But I think what we realize is, of course, steady, like the conventional wisdom of steady growth, profitability becomes important. I think two things that becomes critical that we learn is, number one, we were very targeted in terms of who we equity raised with. For example, we were very fortunate that we wanted to raise 40 million USD last year. We got a $65 million oversubscribed round. And that was because we were focusing on targeting both strategics as well as government-linked funds, because we recognize that at this point in this market, these are the only two funds that can realistically write a check. Not that it's easy still, but this is the only two funds that can realistically write a check. Right? If you put yourself in the shoes of a growth fund manager, right, that who can really stick out the neck and say that, hey, in this market, when no one else is investing, I'm going to make a contrarian view to invest. That's a really tall call and demands from a professional investor in a sector that others may take a wait and see attitude, right? So we find that strategic, and we were very, because of the segment of investors that we target, I think that we have slightly better conversion rate. So that's one. Number two lesson was that a lot of how you conduct ourselves in the past have benefited us tremendously in this fundraise, right? So out of the 5-6 investors, almost more than half of them actually known us 5 years ago. Like, I've met, so Maybank came in and we met the Maybank management. I used to serve the Maybank management in 2011 when I was at McKinsey, and they had a positive impression of me. Or Cool Japan Funds, one of the investment manager, was with Daiwa, and they met us in 2019, 2020. They did not invest at that point in time, but they had a positive impression, so and so forth, right? So I find that building up a track record and continuously doing good work would pay off, even if it doesn't make sense now. And I genuinely think that we are at an interesting pivotal point, because we are moving from alternative financing to mainstream, right? That we are moving from being a startup to a full-fledged organization, in that, A, I think from a financial perspective, moving towards profitability, and B, is also that programs that used to be more for banks. Example, we are part of the government risk-sharing program in Enterprise Singapore as well as CGC Malaysia, right? So these are programs that used to be only available for banks. We are the first, probably still the only fintech company to be part of it. Also, right? So I think moving to mainstream becomes important. Moving to mainstream is becoming important. And if I take a step back in terms of overall landscape for startups, right, that Southeast Asia, like in US, it takes about 7 years to become a unicorn. Or at least that's what one of our shareholders said. And it seems to be true. But when it comes to Southeast Asia, like, it seems to be taking closer to 12, 13 years, like real unicorn, not just paper unicorn, and that you can't substantiate with numbers, right? And of course, there are anomalies and whatnot, but we see majority actually takes longer than not. And that's because the market is more fragmented, it's more nascent, right? Whereby the willingness to pay is lower, the cost to serve is higher, and it's duplicated across different countries and whatnot, right? But I do think that, and do see that once you cross the chasm of the 10 plus 12 years marks or so, the fragmented nascent nature of Southeast Asia becomes a barrier to entry to new players, right? So, and that's kind of where we are at the moment. So I think that, of course, the macro environment is highly turbulent and we need to be very careful. But I do think that we're at a pivotal point whereby we are moving to mainstream, and we'll be here to stay for long.
Kelvin, you would be part of, I'd say, like the sort of first gen of, founders in Southeast Asia that have gone on to build something of endurance and scale. We sit here in 2025, we're probably, 15 years into this sort of first wave of technology in the region. Look forward 10 to 15 years. Do you think we'll say that the next 15 has been much more prosperous than the last? Or, how do you think things will play out in the future for the technology ecosystem?
I think it will be a bit hard to tell for two reasons, right? One is that I think the technology advancements would allow us to build up startups a lot more efficiently, and I think that rings true even for a fragmented market like Southeast Asia, right? That, hey, I don't need to build $1 billion company. Like having many cohorts of $100 million company is good as well, right? For the benefit of Southeast Asia. Having said that, because of the funding winter in the last 4-5 years or so, 3-4 years or so, and you don't see the end in sight, my sense is that unless the government or the strategic step in a material way, there's likely going to be a fall off of a generation of startup founders, right? Whereby, be it current founders who have started maybe a few years after us that can't fundraise and end up having to shut down shop, right? Or funds that have not been able to show returns because of macro context and therefore struggle to raise new funds per se, right? So my sensing is that unless the government steps in to ensure continuity of the sector, it could potentially shrink quite materially and may not recover in the short term. because the economics just don't work out also, right? And if you just fast forward 5-10 years time, the demographic dividend in Southeast Asia will be worse off than now, right? So it makes it even harder for you to push the case that, hey, this is a region that is worthwhile investing to build tech companies. So I do think that we're at a pivotal point, and it really depends on what the government and strategics or the stakeholders in industry do.
And final question for me on ecosystem is the regulatory landscape. So, I think historically most jurisdictions in Southeast Asia have adopted quite an open mentality to financial services in a digital way. What are you seeing, and where do you think that will trend? Do you think you'll have more scrutiny applied? Take Indonesia, maybe on the consumer segment. I think concerns that have potentially emerged there. Or do you feel like regulators are continuing to work very efficiently with fintech founders?
I think both are true in that we find that as the fintech companies become hit scale, it does result in more macro-prudential risk to the overall economy, and therefore we do see regulators tightening requirements. And I think that's a fair way to do it, right? But at the same time, we also start seeing them becoming a bit more supportive. In terms of, hey, in the case of Indonesia, yes, you reduce the maximum interest rates. That can really impact the consumer lenders more so than us. But at the same time, you increase the maximum borrower exposure that SME can borrow from a fintech company, right? So we see that in the case of Singapore-wise, the regulatory landscape has tightened. But at the same time, they're pushing in terms of open finance and crypto, to an extent, crypto more as well, right? So we find that both are happening at the same time. And the key is how can we same as the past, how can we continuously engage the regulators? Personally, my sensing is that the former seems to be moving a bit faster than the later. The tightening is moving a bit faster than the support, because oftentimes the support will go to, and it's naturally, understandably so, right? Because if you put yourself into a regulator's shoes, I want to drive innovation, there's this budget. If I give to the incumbents versus a small fintech player, which I can have a bigger impact to the industry, to the economy, right? The calculus will of course favor giving the incumbents, right? So you end up tightening the fintechs more, but you may give support more to the incumbents also. Not that fintechs are precluded from it, right? But the tendency would be such because of just nature economics that the regulators are themselves facing, right? So I think our sense is that both are true. But as we scale up, I think that the balance will get better and better.
I think as we look to close up here, you've given really good thought process to Ben's questions around macro for Southeast Asia tech, regulatory specifically. Where do you see funding societies in 10 years' time?
Sure, I think funding societies in 10 years' time, the vision for us is really build a integrated digital finance platform for Southeast Asia, helping SMEs not just in local working capital loans, not just in now making and collecting payments, but how can we help them to provide them financing as they expand across Southeast Asia. So how do I integrate the 5 countries together from a business operations perspective while complying with local regulations, right? How can I help a Singapore company expand into Malaysia, or Malaysia into Vietnam, or vice versa, right? How can we help them sell more, providing cross-border trade finance, so on and so forth? How can I, from a payments perspective, which mostly is in Singapore to an extent, Malaysia now, offer the product lines, the full product lines across the 5 countries? How can I help SMEs, not just in Singapore, but Thailand, collect money from their customers in a very polite but persistent way in Thailand as well, so they manage a relationship, right? So that ultimately, for any businesses that want to scale in Southeast Asia, we will become the go-to platform to work with. Doesn't mean that they will not work with banks. They will still work with banks. They will also still work with other fintech companies. But rarely do you see that any bank having an integrated presence across the region. So you speak to one bank in Singapore, the same bank in Indonesia at times don't even talk to the Singapore bank, as if it's 2 different banks, right? And understandably so from a regulatory perspective, right? Similarly, for fintech perspective, you don't see that many fintech companies to cover the presence in Southeast Asia as we do also. So we do think that we have a unique opportunity whereby compared to peers and stakeholders, there's a huge demand to serve. Others are not really looking at it. We have built core capabilities in both lending and payments. How can I bring it to its full glory and really integrate together across the 5 countries?
Final question for the early stage founders that are listening. What would be some final words of advice, learnings that you've had, war stories, etc., that you could impart on them?
I think the best advice that I could, or at least the ones that we've been using internally, is really stay pragmatic and cross-check with your ideals regularly. So what we find is that there are so many school of thoughts that will come in terms of how you should do A, should B to do C, right? And what we realize is ultimately what rubber hits the road is what matters, right? That, hey, like e-commerce merchant financing, yeah, it's a really good story to tell the investors, but it's not generating numbers like because of ABC challenges that we face on the ground, right? So staying pragmatic, I think, becomes quite important. But at the same time, what we find is that many people, team members, stay because of the values that we hold true, right? And because they trust the values that we are holding true, they're willing to stay with us. So, for example, what we realize is that whenever we do performance management or we tighten performance management, we get a hit, or we'll get a wave of Glassdoor review complaints. Also, very timely, and sometimes it's about team members who they'll quote some things that are partially true also, right? And for us, the whole principle is that, hey, the principle for us is to treat everyone fairly, right? To the extent within the strength of the company, generously and on a fact basis, right? So I think we've been very fortunate that we did the right things. Situations come when it does hit people in the wrong way, and some people will actually vent their frustrations online. And because of our responses online, and thankfully some platforms give us a chance to respond, actually people join us because of how we have responded to criticisms or bad situations, rather than saying that just being purely defensive, right? There are things that were wrong, we acknowledge it. There are things that we did right, or it's not a full picture, we clarify it along the way, right? And that has worked out well for us. So I think it's really a combination of both being pragmatic, but also sticking to our ideals.
Kelvin, thanks for joining us on the
Thank
first.
you.
Thank you. Thanks for having me.